Good morning, everyone, and welcome back to this new edition of the Daily Analysis. As usual, let's start with a recap of what happened yesterday. So, yesterday was a day that could have turned out to be very interesting. There was the important CPI data, which came out quite positive compared to what the concerns were. The fact is that the markets, right when the data was released, immediately found a bullish queue, basically with a sharp upward move. Except then, just like in the very best bull trap traditions, it went back into the previous range and ended up closing lower, with lower highs and lower lows pretty much across the board, almost forming reversal patterns, but I want to stress, not completed, on the daily charts. Indeed. So, the situation is getting a little complicated. This is because, in my opinion, this data should have and could have given the market more momentum, which didn't happen, mainly due to the lack of volume. So this is another warning sign that, let's say, we can interpret as yesterday's data being definitely positive, but it somewhat disappointed market expectations, basically because the market then pulled back and many people, maybe riding the wave of the news, the release of the data, ended up a bit trapped at the top. So today they might. What could today's scenario look like? Today we have the PPI, which is just as important for understanding whether, well, this whole situation with tariffs will eventually end up affecting consumers sooner or later. The PPI is the Producer Price Index, so it's the first step in the production process. So if this data already starts to show an increase due to the introduction of tariffs into these channels, into these baskets, well, this could definitely unsettle the market and could be yet another warning sign. Basically, until the market actually shows us that it has turned, we can take these as warning signs and pay very close attention to them. Another aspect I wanted to consider. Well, today there's also the auction of the 30-year U.S. Treasury bonds. Actually, in the past few days and especially yesterday, the 10-year auction went particularly well, so probably the 30-year one should also, well, have strong demand, and this could give a bit of a breather to, well, bonds. Another further aspect to consider. Sorry if this introduction is dragging on a bit this morning, but in my opinion, there's a lot to talk about, is the escalation that we're all kind of underestimating a little, the Iran-Israel escalation, with new threats and new tensions that could, well, set off a rather unsettling scenario. In short, we're already starting to see some of this reflected in the price of oil, which is, well, really surging. Yesterday it was, and now it's around 67.50, but yesterday it even reached 68 to 68.50. If it were to break through certain levels, the room for it to rise is really huge, because after 85, the next resistances are in the 105 to 110 area. So this would definitely be a huge problem for the global recovery, with all the consequences we can imagine if this scenario of escalation between Israel and Iran were to, well, unfold. Let's obviously hope not. It could be a so-called black swan event, but let's hope none of this happens. Okay, with that said, as usual, let's move on to look at the charts from an operational point of view, starting with the Nasdaq as we mentioned yesterday. It made this big spike when the data was released, broke out of the range, but then, here's a test, and you can see it kept making lower highs and lower lows, ending up closing in the lower part. Then, overnight, it went on to test the whole area of the lows around 7,750 to 7,730, which we pointed out yesterday morning in the analysis. So right now, basically, we're operating in the lower part. A break below 730 could easily bring prices back down to around 24,000 to 24,300 or so. And well, from there we'll see what happens. Obviously, the scenario could also turn around. A particularly positive data release this afternoon could flip things and maybe push prices to retest yesterday's highs. As long as things stay like this, we need to stay alert and keep a close watch on these levels, which in my opinion are the real dividing line. A similar situation applies to ES, where right now we can identify the 6030 area as the dividing line, which is basically marked by this nice BC3 level and, Wednesday's opening, which also matches today's HV. So this is the dividing line for ES. Obviously, ES has made the same move. You can see here too, lower highs and lower lows. So pay close attention to the upside. Let's obviously keep an eye on the area of yesterday's highs. On the downside, we should watch the 6000 area, and in the middle, we have this 6030 level, which would take us to the upper part of the range. Let's obviously also take a look at the other two American futures. Here they come, starting with the Dow Jones, which has also kind of followed the others and is now positioning itself in the lower part of the range. So here too, we're going to monitor the downside at 42,600 to 42,500, and on the upside, we'll keep an eye on 42,980 to 43,000. Basically, this is the area to watch. So, here we're keeping an eye on these two areas for any potential breakouts. Let's take a look at the Russell, which, as I've pointed out in recent days, has been slightly outperforming the others. Even when the data was released, it had a nice upward surge because such a positive result could, well, it could lead the Fed to cut rates further, since there's still room to do so. This, of course, benefits the small caps that make up the Russell Index, so we saw a strong rally there. But here too, it's a similar situation, even though in this case the trading volumes were a bit higher compared to the Nasdaq and the ES, which had this little upward move, but, well, it happened with almost no volume. Well, on the Russell, there was this spike, but then it completely pulled back. Overnight, we settled around the 2,130 to 2,135 area, which is the level we've pointed out as the one to watch right now. So, we're keeping an eye on that level to the downside. On the upside, obviously, we need to monitor the first resistance, which is around 2,145 to 2,150, and then the next one at 2,160, which seems to me to be the toughest one to break through. Let's take a look. Let's move on to commodities, starting with oil, which I mentioned early on. No, let's check out the DAX first. Here it is. The DAX keeps slipping further down, still with extremely low volumes, but after hitting new highs last week, it's now started this nice downward move, which we can even map out with a little regression channel. You know that I really like this tool, so starting from the high, let's quickly draw it and see what kind of signals it can give us. Well, I'd say they're excellent signals. Just imagine, this is a 5-minute chart, so it's really nice, a channel that's continuing, and we're in the lower part of it, so let's keep an eye on this channel and follow it, because right now we're sitting right on some already significant lows around 23,770, which were recorded this morning at the open. So, a break of this level would open the door to much further moves. I should probably check it on an hourly chart to find. Here it is, so the next target could be 23,730, and further down, 23,530. Unless, of course, it drops even further to retest these lows here. So, pay close attention if you're trading the DAX at these support levels. As we were saying about oil, here it is. This is a daily chart of oil. Right now, we're here, so in my opinion, a break of the 70 to 71 area would lead prices to test 78, 79, and that's the first one. The 84, 85 area is the first real level to break, once that's broken. There really aren't any other obstacles, at least as I see it, until 105. So let's keep an eye on this situation here as well. It could also just keep moving sideways for a bit, waiting to see how things develop, as I mentioned earlier. Let's hope, and I certainly hope, that none of this happens and that we move toward a de-escalation, of course. Let's move on to gold, which also surged yesterday following the data, but then pulled back. Still, it found support around 2,350 at the lows recorded on Tuesday. After that, it started climbing again, reaching up to around 2,340, and now we're trading near the highs. So, right now, we've matched this other high here, which means this is the area to watch. If this level breaks, prices could easily return to the highs around 2,425 or 2,430. Perfect. Well, SPX remains pretty similar, but I'll repeat, remember that tomorrow there's the contract rollover, so ES, Russell, and Dow Jones will roll over, while the Nasdaq becomes a float contract starting Monday. As we were saying about SPX, it also made lower highs and lower lows yesterday, as you can see. We came back down and touched 6,000 again, so here too it's a situation to keep an eye on. In my opinion, a drop below, a break of 5,990 would easily open the way for a test move down to the 5,920, 5,930 area. And now we just have to look at Bitcoin. Here it comes. Yesterday, it also made this series of highs here, tested them, tried to break through but couldn't. It broke that pivot I had identified yesterday morning, which was this one here. It made an initial rejection. Basically, with this pivot it made a lower low, but then it more or less stopped again at the same levels on the way up. Then there was a break, a retest from below, and now it's continuing. This could easily lead prices to retest the area around 105, 104. On the upside, of course, we're keeping an eye on this area with all these highs here, which at the moment becomes the most important resistance. Perfect, we've reached the end of this daily analysis. As always, I invite you to leave a like on the video, follow me on social media, and we'll catch up later in the chat. Thank you all for your attention.